What's going on, everybody? I'm just recording this video today as a little case study on Aussie dollar. Now, this isn't a trade that I took personally myself, as I was out of my office for the most of the better part of the day, but there's some important lessons here that I'd like to go over as I'm marking out my charts. So on the 1 hour time frame, we can see that we've got clear bullish order flow, right? That's quite obvious. Clear bullish order flow. And in most recent price action, we had a big range here. Price dipped below, clearing lots of liquidity from this area. But more importantly, this is the most recent structural break, okay? So we can see that price action took out this point of structure quite impulsively with strong bullish momentum. And so the point of origin for that move is not here, but actually down here. So the zone that I have marked out here, it was refined on the 15-minute. If you're starting from the 1 hour time frame, it would look more like this. You'd want to enclose both of the wicks of that candle. Keep in mind, it doesn't have to be the sell candle before the buy. It just has to be the low momentum candle, which is exactly what I've highlighted here. So let me take it back to where it was, because that was my 15-minute refined zone. Now, as you can see, there's a higher time frame, 4 hour supply zone that I have marked out on my chart here. We're not anywhere near that zone yet. So until we reach that zone, I'm bullish in my bias, okay? I'm looking for buys because we have clear bullish order flow. Once we get to the higher time frame supply, I'm going to be switching my bias and looking for sells depending on the delivery of price action into that zone. If we approach it very impulsively and are not respecting supply, then I'll continue looking for buys. But I'm anticipating that price is going to turn bearish from this zone. Anyways, I'm going to go over these drawings in a minute. I just wanted to start from the higher time frame, the 1 hour, and identify the point of origin for this break of structure right here. Okay. So again, I know that this may look like the candle to target, but that was clearly used as inducement, as there's liquidity sitting below it. Price induced buyers early on, took out their stop losses just to mitigate the actual point of origin down here. Now I can call this the point of origin because that's the point where it was the point right before momentum truly kicked into the market. Okay, as you can see, we have this large impulsive bullish candle here, very high momentum, full body candle, and this was the point of origin for that. So this is the extreme. Okay, you could target this and see how it reacts on low time frames, but this would be the extreme. So now that we've gone over the 1 hour sort of bias of things, let's drop down to the 15-minute and we can take a better look at everything I've drawn here. So now that we're on the 15-minute time frame, oh, this is a little bit off. Let's just extend that a little bit. So as you can see, the 15-minute refined zone, it's basically encapsulating this top wick of the bullish candle as well as the bottom wick of this small bearish candle. Now I believe where I had it before was like that, so it was just refined to this bullish candle. Yeah. Now if you were to take a risk entry off of this, obviously you would place your stop loss comfortably below, so it's either covering that bearish candle or even further down, so it's covering the actual low. Now this isn't an area that I'd want to take a risk entry from, so I did not, and that's not what we're going to be going over today. So let me just get situated here. Yep, so as you can see, right around here is where we tapped into our demand zone. We had a strong reaction from that. So basically you'd want to, when you identify these zones, you'd want to set an alert at the open of the zone, right? Add alert, then you get notified once price taps into your zone. And from that point on, you can monitor on the 5-minute or the 1-minute time frame, or even the 3-minute if you like, to look for more confirmation to enter a trade. Okay, so from the 15-minute time frame, there's not much else to look at other than the fact that the zone has been refined to that candle right there. Because right after that candle, where we had a little bit of indecision in the wick there, right after that candle, momentum kicked into the market, a little bit of a range, and then expanded once again to the upside, clearly breaking structure, okay? So now that we've gone over that, I want to drop down to the 1 minute time frame where we can really see the annotations that I've set in place here. Now again, I didn't take this trade. I just think it's a really good lesson here, and it will provide a really good understanding of how the strategy taught in the course can be utilized fully. Okay, so let's take a look here. Sorry, my trading view is kind of laggy right now for some reason. I'm not sure why. Okay, so I have a few things marked out, right? This is the first point that we tap into our demand zone. Now, as soon as that happens, I'd want to be looking at, okay, where was the last point of supply? Because that's where we'd want to see how price gets delivered into that zone, okay? How does price approach that zone, and how does price react to that zone? So the last point of supply was this right here. That's a little bit off. Let's adjust that. Right, so that little doji candle there, that's the last point of supply, okay? Now, that supply was created, that high was created, we traded away from it, tapped into the higher time frame, 15 minute refined demand zone, clearly rejected away from there. Now, once that happened, you know, we pushed through this minor supply here, ranged a little bit, expanded once more, and then we reacted really nicely from this supply zone, okay? We just tapped into it slightly, and then you can see how price just melted away from it, okay? So that's showing me that temporarily, at least temporarily, supply is still in control, okay? We're not ready to, you know, go to the moon just yet. Supply is still in control. It's being respected very clearly by this very precise reaction, okay? It's not coincidental. It's actually very calculated. So once price starts melting to the downside, we clearly react from, you know, the supply right here, or sorry, the demand right there, the very minor demand above the higher time frame reaction. But that's not something that I'd trade from, okay? Now, if that fits in your plan, if you like to trade that way, if this somehow fits your criteria, then that's fine. You know, you're responsible for your own trading criteria and back testing your strategy. So technically, if you entered from here, even off the EQ, sure, that would have been a good entry, even if you covered the low here with your stop loss, maybe a 3.5 pip stop loss. You could have gone smaller just to cover the wick of the candle that you were initially targeting. You know, you could go 1.5 to 2 pips, and obviously you would have gotten in very early on this huge bullish move, so that would have provided a huge risk reward opportunity of about 20R. But like I said, this simply doesn't fit my plan. Now, why, you might ask? Well, because this move here, the demand that was responsible for this move up towards supply, it never broke supply, okay? If we broke through supply, then I would certainly be targeting this as my entry and get in long from there, okay? But we didn't actually break supply. We reacted from it very precisely and then melted away from it. So because of that, it tells me supply is still in control and this level isn't very valid. Or, you know, it is valid. We can see that it was valid. It had a nice reaction and then traded away. But it's not a high probability area that I'd like to enter from. It's not somewhere that I would like to risk my capital from, you know. So with that being said, you need to, at that point, monitor price and see what would be a valid entry, okay? Again, if this fits your plan, that's fine. Not for me. So what I would be looking for is a clear break of this structure, right? Which is supply, okay? Supply was still in control at this point. So we need to see a break of that supply level to show that demand is now in control, okay? So, you know, once we created this low here and started trading upwards, a little bit of an expansion, range, more of an impulsive expansion. And then you can see as soon as we reach this supply zone once again, price starts to range again, okay? So at this point, it's kind of debating whether or not it's going to if it's going to respect the supply zone once more and trade away from it, or if it's going to impulsively break through it. And so after that range was created, we clearly broke to the upside. Now, that's the important part right there, okay? Let me zoom in a little bit better so we can get a clearer view. Hide this for a second. So like I said, once price reached that level, we created this range. Now, whenever there's a range created like that, we know that something's about to happen. It could go in either direction, but in this case, we're anticipating that our higher time frame demand zone is going to hold, right? This is a 1 minute supply, okay? This isn't very powerful. It's more so temporary to induce buyers and sellers in the wrong directions. So we're anticipating that the higher time frame demand is going to hold. And this was also another sign that it is going to hold, because instead of breaking below this level, we closed above it and then traded away from it. So these levels are still being respected. Higher time frame demand is in control. We know that, especially after the minor supply was broken with this impulsive move right here, okay? So this move right here is where I'd be looking for an entry, right? The range was violated to the upside, and that candle right there created a lot of imbalance, and it also flipped this supply into demand, okay? So that is a valid flip zone. Now, if you forget what a supply and demand flip zone is, just go back to the course. We have a full section on it. So price traded into the supply zone, right? Supply zone is right here. We reacted to it, traded away from it, but then eventually violated it, okay? So that's a flip. It flipped from supply to demand. So once that momentum broke through the supply zone, where was the last point of demand? What was responsible for that break, right? Technically, you could refine it to this small bullish candle right here, but we're talking about very small amounts of pips here. So what I would do in this case is keep it contained to the small bearish candle. Right? Just like that. That is our new demand zone, okay? That bearish candle there, and this small bullish candle, that is the last point of demand before momentum kicked into the market, flipping the supply zone to demand, okay? So we clearly broke structure here. The previous structure that was back here, that was acting as supply, broke through that. This is our new point of origin. That's where we enter the trade, okay? Very simple. So now let me go back to my Fibonacci tool, because that's what I use to map out my entries. As we can see, the EQ was not mitigated in this case. It doesn't have to be. This is something you need to backtest on your own. Backtest on your own. Whether you enter off the top of the zone, maybe the 25%, the EQ, maybe the 75%, it's completely up to you, right? Me personally, I like to enter off the EQ, but when we're on the 1 minute time frame, you know, I don't go lower than like a 3 pip stop loss, right? So if entering off the top of this zone and getting my stop loss just below the recent low, if that allows me a 3 pip stop loss, then I'll go for that, right? Because I'd rather get triggered into the trade. Like I'd rather be very confident that I'm going to get triggered into the trade rather than targeting the EQ just in hopes of getting a tighter stop loss, right? Like I'm not going to be that greedy. So as you can see, this area was mitigated beautifully. As soon as we wicked into it, price took off from there very smoothly towards the take profit for an overall 7R profitable trade, okay? Now again, I didn't take this trade. This is just a really good lesson to go over, and it explains how to utilize this strategy on multi-time frames. So this is just a great example of you know, mapping out the higher time frame demand. We first found it on the 1 hour time frame following a break of structure, refined that zone down to the 15-minute time frame just to get, you know, a tighter area to work within, more precise area. Once that was taken care of on the 15-minute time frame, we went to the 1 minute time frame and looked for confirmation. That confirmation was an initial reaction, traded into supply, most recent supply, traded away from that, but supply showed us that it was no longer going to be in control because it didn't have enough power to break this low and violate this overall demand zone, okay? Because supply didn't have enough power to violate this zone, started trading higher, eventually broke structure, turned the supply into demand, right? Successful flip zone. And upon confirmation of that flip zone, we enter the trade, okay? Range, impulsive expansion, retracement to mitigate the demand that was responsible, takes off from there, okay? It's actually quite simple. So I really hope you guys took a lot of value from this. Now, just to briefly explain why I have this ray line up here and why I set the target to where I set it. Let me jump back to the 15-minute. Where are we? Right, so technically, if demand is in control, you can expect this to keep going higher and higher and higher. You can, depending on how long you like to hold your trades for, you can be targeting these highs here for 13 to 15 hours, something like that. That would of course be a much more profitable trade. For this example, I'm just going a little more short term and targeting more recent supply. Okay, so you could have targeted this high right here. It wouldn't have been a very good trade, to be honest. What is that? Yeah, like just under 4 hour, nothing special. Me personally, I'm looking more so towards this supply. Of course, on lower time frames, there's more clear price action within the wick. The wicks always tell a story. Let me drop to the 5-minute. Actually, it's probably easier to see. Yeah, on the 5-minute time frame, it's much easier to see. The ray line is set at the very bottom of the wick there, because like I said, on the 1 minute or the 30-second or 15-second, there would be a lot of story within that wick. Okay, so that is a clear supply zone within the wick, and that supply caused a break of structure, right? Cleared a lot of liquidity, and overall led to this whole move right here, this whole bearish leg. So that's the supply I was targeting. Just to round things off, I like to keep things simple, so I put it to exactly 7R rather than the 7.33R. I just like to round things out, so keep it a nice 7R. 3 pips stop loss, 21 pips of profit, overall 7R risk to reward ratio. So yeah, that's about everything I wanted to go over. I just thought this was a really good lesson on how to utilize multi-time frames. So we went from the 1 hour to the 15-minute to the 1 minute for execution. And you can see how easy it really is once you know what to look for. The 1 minute executions are not as scary as some people make them out to be. We literally are just waiting for confirmation, okay? So again, just to recap, the confirmation was we had an initial reaction from the higher time frame demand. But if supply was going to continue to be in control, then we wouldn't want to get in long on this trade, right? That would be very risky. But as soon as we created a flip zone right here, that's our indication that, okay, supply is no longer in control and the higher time frame demand is going to continue to take control, okay? The flip zone is what told us that. So we had a range here reacting to the zone once again. Of course, we had an initial reaction here, but then price came back up to it. We created a range. That's basically indecision, building up orders, being indecisional, building up liquidity in preparation for what's about to happen. And of course, price broke through the supply zone, prompting us to look for demand. Once the demand is mitigated, that's when price took off, okay? These are the confirmations that we need to look for. And that's what adds such, higher probabilities to our trading strategy rather than just taking risk entries. Risk entries have a time and a place, and they're definitely useful. I utilize them quite a bit when I have a busy week, in my personal life, and I'm not on the charts too much. But if you have the time, looking for these confirmation entries, looking for these supply and demand flips, these provide really good trading opportunities, really clean trading opportunities, and it'll ensure that you have a very high win rate if you're looking for the right things, okay? So I really hope this video helped you guys. Let me know in the Discord. Feel free to DM me, reach out to me, let me know. I really like hearing feedback from you guys. If this helps you in any way at all, I really love to hear from you guys. It really means a lot to me. So yeah, Catch you guys on the next one.